Hi guys, welcome back. Interest rates are low. Time to hit the bars. Nope. No, interest rates are low. It's time to go for a mortgage, right? Guys, it's a fantastic time. Like I said, interest rates are low, and but the thing is, it's the most critical decision, right? It's the most probably the highest financial commitment that you're gonna do. And you have to do it right. It's a calculated decision with a calculated risk, and one of the important things is finding your mortgage lender, right? How to find them, what are the pros and cons of going local versus national lender, right? Those are the points that we want to talk about because it's a very timely topic because like I said, interest rates are low. Isn't that right?
That's right. Yeah. So actually, this is the best. I think best time to if you are trying to buy it, right? This is probably the best time. But if you are not in a hurry to buy it, I would say wait for 6 more months or four
Right.
more months until October.
Why is that?
One because the mortgage forbearance. It's a lot of people right now. I think 10% of the mortgage
Mhm.
is under 10 to 20%. I would say it's under mortgage forbearance. So they basically extended their. They are not paying the mortgage
Mhm.
for because of the COVID going on, right?
Right.
Crisis. Until October, they don't need to pay. Um,
So they're differing, like they
yeah, they're
differ to
differing.
pay.
And Fannie Mae and Freddie Mac came back, and they're going to have from July 1st. I think they're going to have another one, right?
Okay.
You can defer their mortgage. There's so many deferment going on right now, right? So what happens like after October? It's still the case. People don't have jobs, and it's going to they cannot pay the mortgage. They can extend 6 more months, another 6 more months, but it's going to affect their credit and everything. So because of that, most people just try to sell it off. So a lot of houses will come to market in the late fall, right? Normally it's not the house, like market house market goes up during the summer and come down during during the fall, late fall.
Okay.
And it's not too many people going to buy in the fall, but too many houses will open up.
Yeah, the supply is more, right? But
Yeah, so
because
it's
of this whole
because of
COVID,
the demand and supply, right?
right?
Because of that, there's going to be prices going to go down and all those things. So if you can wait, I would say wait for it until October
Okay.
or further down, and it's going to go down. Price is going to,
Good point.
yeah. And the rate is probably people are saying that sometimes the rate might go up. They're
Mhm.
talking. There was an article about it, and
Yeah, because that's what I was gonna ask you. So will the rates be the same or
no, it may go
more?
up. Like it fluctuates based on the treasury bonds. Like it actually, 10-year treasury bonds, it actually imitates that, right? The mortgage rates, basically the same. Whatever happens there, it happens here. And so because of that, this is a good rate, you can lock it and buy it.
Yeah.
But you may pay 10% more for the house because of
Okay.
the seller's market right now.
Right. Okay.
So anyway, we can jump into the like
We
how do you find lenders,
find the land. Yeah.
right? So right now, like you never bought a house. Let's say you don't have any experience. You never have a contact of anybody, but you have an account with one bank, right? Let's say you have a checking account, savings account, or something, right? So you're always thinking, oh, that bank is going to give me a good loan, a good rate. That's not the case. It depends on, like, there's so many things going on. It's a national bank. National bank means like the bank that is in every state almost,
Yeah.
or the local credit unions, right? That might be only in your city, the small one. And you don't need to have an account, but they know your area, your local market, where you are buying, right? So sometime, like instead of going with the bank that you have account with, you can still go with that. There is like a almost like 40 days, I think 40 days, yeah. So 40 days you can shop around
Right. Right.
and get multiple pulled credit pull.
So within that 40 days, it doesn't matter how many number of lenders that you try with. It doesn't affect your credit score, right? Is that right?
Exactly, right. That's considered as like, even if you do like 5 or 10
Software.
uh pull, it's
Mhm.
still considered as one, right?
One.
It's
One
not
hit.
going to
Sorry. One hit.
affect your credit score much. And that's why like you have to shop around, and within that period, like I would say within like a month period, right? Just shop around and decide your lender. That's why you need to go with the bank that you have account with. Just go and ask for how much they can give you loan and all this pre-qualification letters, right?
Right.
Then same with the credit union, local credit union. You do that with multiple banks. I would say Quicken Loans is another one. I don't want to tell exact. We don't want to tell you the exact recommendation, but Quicken Loans is the highest, in the U.S. at least.
When you
They
say highest, you mean like
number,
highest
num-
number of loans?
yeah, number of loans they do, and then they sell it off to the third
Oh, okay, okay.
market.
Secondary market. Okay.
Yeah, and because they really quick, like if you do go on quickenloans.com and just ask for a pre-qualification letter, you might get it in within 30 minutes. You might have a pre-qualification letter in 30
Very
minutes.
good.
But if you go to National Bank or credit union, it may take a day or two. They may ask for a lot of different things.
Okay.
So that's why the Quicken Loans is being very quick.
And is that like for a quick question? If you want to go for a loan, mortgage loan with a credit union, so you have to be a member first, and you have to have an account for a certain period of time. Is
No,
that a thing or?
it depends. Probably some credit unions, like for example, like a Navy Federal Credit Union, right? That is a federal credit union. You have to be a federal employee, or I do have an account with them, but I got it long time ago because of some other membership I had.
Oh, okay, okay.
And some credit union, you need to have a membership with something, or you need to be a in the army. You have to, then only you can become a member.
Okay.
Like a Pentagon
Yeah,
Federal Credit Union, right? PenFed.
yeah.
You
And
cannot be a member unless you are a member in that organization.
right, right, right.
But other local credit unions, you don't have any restrictions.
And even PenFed, like Pentagon, PenFed is Pentagon,
Right, right.
right? And so to become a member, all you have to do is, if I remember correctly, just open up a savings account. You don't have to be a federal employee for that, right? Is
No,
that right?
yeah, you don't have to be a federal employee, but you have to pay like $25. I got it like almost 10 years ago.
Yeah,
At the time, it was like that $25 you had to pay for some membership.
some membership.
That's basically one-time fee. Once you become a member, once you have a member in that one, you are eligible to become a fifth. It's like you have to
Right.
do it in a two-step way, but
Yeah.
you get the
So
membership.
basically, the point here is like if you go with a national bank, like like you said, a bank that has presence in pretty much every state or most of the states, the process takes longer,
Right.
right? And that's a
1 to
disadvantage.
2 months. I would say 2 months
Oh,
is a typical time.
okay. But the local, like you said, sorry, they understand your market and they probably be quicker, right? So
Right.
that's one of
Right.
the
Yeah, the
okay.
local one will be quicker, and because you know the local market, the real estate. Sometimes even like the national one, the national banks won't approve the loan for some properties maybe in a street that is not recognizable, or it's like the house is kind of a little bit. They don't know the market value of the house, so
Okay.
because it's. But the local credit union, they know much about it,
Okay.
and they are confident to invest on that along with you,
Right.
like they can give you a loan. That's another thing. Another thing, like you don't have any money, let's say you don't have any money, right? There are multiple options for mortgage. We probably already talked about that. FHA
Okay.
is one. Like you only need to put 3.5%,
Hmm.
3% like that, down payment, right?
Right.
That's a FHA, Federal Housing Administration loan. And for that, there are a lot of restrictions because there are specific banks, approved banks. You have to go through those banks, and it has to be a primary residence, not as an investment property.
Correct.
All those things, but you have options to do FHA 3.5%, but you have to have at least 620, I think, credit score, 620,
Okay.
something like that. Let's say your credit score is really worst. Let's say you only have 550, right? But you still want to get a house because you're paying $1,500 rent every month. You're
Right.
getting $2,000 check so every month, and you're paying 1,500 there, right?
Right.
It's all everything going. But you want to say like maybe $1,000 your own house, you might pay only $1,000, right? So in that case, you actually go to private lender, something called
Mm.
private lenders. So like me, like you or somebody, like anybody who has money, right?
Right. Like boutique. I think you can call them like boutique lenders,
Yeah.
right? And that's definitely quicker. And
But the interest rate will be double. Like it's not going to be 3%. It'll be
because
six,
they're
7%.
private lenders, and they have to bear the risk because your
Right.
credit score is 550, and because of that the interest rate probably double, so that makes sense.
Right. The idea is
Yeah.
after you get it through private lenders, you still have option. Like after get it through private lenders, within a year, right? You actually get the loan from. By the time you try to improve your credit score, get the loan from a different refinance it.
Refinance. There you
And
go.
it'll become 6% to 3%.
Right.
You can still make it up, but within a year, first year you may have to start pay more. That's okay. You just have to jump in and
Yeah.
bite the bullet.
And that was actually we discussed about that too, right? In a different episode here, how to pay, the advantages of paying double and
Right.
half in the start of the month, half in the middle. So if you have any questions regarding that, please feel free to ask that question in the comments box. So we can refer you to that video.
Right, definitely, yeah. Those are some of the things that we just gave you a quick overview of where to get the mortgage in the beginning, but we will have a different episode in-depth episodes in the future of talking about these.
Well, great session. Thank you so much. And like we said, interest rates are low, and you can still wait until probably like around October because supply is going to be more, and you probably get a better deal. So thank you so much for watching, and until next time, it's
Thank
bye
you.
from us.